Shout out to the VIP guys. It's London with Crypto Kingdom and Bitcoin Spike. I'm going to go through something really cool today in terms of the chart, in terms of the price action. It's a technical that I picked up on, and it's on a specific time frame. I want you guys to pay attention, please. If you don't have time to watch the entire stream, please pay attention to the first 2 to 5, maybe 10 minutes. I think it will be very beneficial. Let me go ahead and get this link out to a few people that I know. I want to shout out to the VIP. It is early in the morning. This is kind of the best time for us to kind of convene a little bit while Asia is up and trading. So we like to be a part of the action while the action is developing overseas. Crypto is open 24/7, 365. So in terms of that, let's talk about, and I'll let a few people get here. Let me go ahead and discuss what we're going to talk about first of all. And I'm a former financial professional. This is not financial advice though. Okay, so go get your own financial advice if you'd like it. I know everyone's looking at the universe head and shoulders. That's a nice pattern dynamic that is certainly in play. One thing that I want to focus on today is the extensions. Okay, these extensions that I have laid out, essentially the pricing targets to the upside, and I'll get a little more specific with those here in just a second. Let me go ahead and get one of these specific links to the VIP in the back. There we go, and I'll cut a shorter video as well so that everybody can get into the framework of exactly what I have laid out. I just think that I know that once you find like something like this on a chart, once you find something like this on the chart that achieves complete compliance with Fibonacci's, etc., on a specific time frame, you just want to take note of it specifically. Okay, we've done a lot of let's say a lot of measurements, etc., in terms of the overall. Let me go ahead and put the drawing pane back on here. The overall, let's say the extensions from the ground, when I say ground zero, that means from zero, right, to the all-time high, okay, on the candle wicks, and then bringing that down. Okay, we've done a lot in terms of the technicals as they would comport with that, the extensions, the express targets that we would have to the upside, etc. And so we've been looking at a certain set of extensions throughout the entirety of this specific, I'd say, run that we have from just below that 50% level. What we would say is that would be just like a macro consideration. If you would look at that, we would measure from zero, literally zero, to the all-time high, okay, which would be 69,000. All right, then we would we would reframe the bottom portion of the extension down to the low in and around that 33,000. Okay, so those would be the targets that I have there on the left-hand side of the screen. Real easy to deal with, real easy to arrive at. They're Fibonacci extensions, the move we would expect to the upside, essentially the targets to the upside. So right now, though, however, I would like to get into something very important. It's going to be something that I want you guys to recreate on your screen if you can. I think that you'll find it very useful in terms of looking at least at where we are right now, combining these extensions that I have right now with the macro extensions that I just went over, that 0 to the all-time high down to this 33,000. I think you guys will be very well. I think you'll be very well suited in terms of your upside price targets as we go forward here. Essentially, the take points for let's say that the market will be definitely looking at. I know that they're looking at it right now. So as we look at this, just zoom in here for a minute. Maybe have your desktop on the side. Let's go through this real quickly. All right, now, in terms of the daily chart, I want you to go to the daily chart if you can, okay? Just click on the daily chart because a lot of things are time specific. There's a lot more volatility at the lower time frames. You guys know that. At the higher time frames, we have more consolidated price action, okay? So the specific line on the daily chart is going to be less, I'd say less expressive than, let's say, at least the candle wick, right? Let's just go from July 21st real quickly, then I'll explain exactly where we're headed with this, okay? We'll take the top, for instance, as well. The top is a very nice example. The top on the line, 67,413, all right, 67 instead of that 69,000, right? 69,049, thereabouts, okay? So the line is going to cut short a little bit of the price action. And it's important to recognize that when we're drawing out these extensions, okay? You understand the extensions are going to require, just real easy, guys, if it's going to require 3 clicks, okay? Just 1, 2, 3 is what it's going to require, okay? And that's going to give you your upside extensions. That's the right way to do the extension. So let's talk about this specific line and this specific hit here in July, on July 21st on the line. And I'm bringing this up specifically on the daily, on the line chart, okay? On the line chart, starting July 21st with your first click, bam. Taking it up to the top here on the line chart again, your second click up to that 67,767 thereabout, okay? So bam, second one. The third hit, and it's just really nice to see this level of compliance, bam, back down to this, let's say on the line, on the daily line chart, 35,156. Bam, okay, boom. That's your guys going to be your third and final kind of I'd say click that you will devise your extensions with. If you recreate this, you'll see something that's very important. And I think we covered it in passing, but I just want to, as we're looking at upside targets, as we're looking at some pattern, fulfillment, etc. I just want to keep these back on the record that we are covering them specifically, okay? And again, we would lay over the macro, the 0 to the 69,000, not the abbreviated kind of look here with just the condensed consolidated line chart on the daily. No, we would lay over the macro from 0 to 69,000 to down to the low here of about 33. So we would get more specific with it on the actual candle wicks on a different, I'd say on a different layover, okay, in terms of the differentiated options for your targeting on the upside. So the target on the downside was great. Okay, nailed that. You're in a position right now, if you're VIP or you've been subscribing, etc., that you probably are in a position you could just let profits ride if you wanted to and place that principle in your pocket. That's the way to start 2022. It's awesome. In terms of this 23.6, let's take a look at that 23.6 because on the extensions, that level. And we covered this just briefly. We didn't go over it very in too much depth, I think. And I don't know how many people were there when we did cover it. So I just thought today, given that I know who is in the crowd right now, I wanted to make sure that we covered this specific level because the 23.6 did get hit. We're currently testing that level again. When you see this level of compliance with an expressed indicator or an expressed measurement for Fibonacci, etc., on a designated time frame, and you do see a return to, let's say, just or an accomplishment of price to the 23.6, that's a big deal. Okay, this is a big deal that we have some conformance here in line with this preceding run, the measurement with the retracement, the extension, that percentage, which we are reaccomplishing essentially with the price. That it's on the 23.6 right now, that we've contacted it once and that we're at it again, is a big deal. Okay, so I'm paying attention to these specific upside targets. Okay, and we'll be paying attention to them. I will be paying attention to them for a while. Okay, because there is this express level of compliance with the Fibonacci extensions on the daily line chart. Okay, there's going to be a lot of different ways to measure your targets. Okay, the fact that we have hit one here, and yes, there are some other indicators here in terms of, I'd say some other, if we would call it definitely like a cross trend line or a trend line here from this hit along the line of 58,876 to this hit here of about 52.6. Okay, this specific line has been very important to us as well. That is currently in play, seriously in play. If we get a little bit more specific, and currently the price is at 44,209. Okay, but as we look at that specific prior line of, it's a cross trend line because it does have the expression of resistance to at least an attempted support. So that resistance to support creates the dynamic of it being designated as a cross trend line. Okay, so as we would look at the action, this action here stopped at about that line. Okay, in concert also with that 23.6. We're up and above. Yesterday we closed up and above. Okay, that line of resistance or that cross trend line we just referenced. Okay, the fact that we're at that level of the resistance, the fact that we're also there at the 23.6 on the extensions, it's just those are the two crucial at least starting points that I'd like to mention for you guys as you line out your technicals on your desktop. Also, you clearly know the bottom line support from October 2020, the 10,000 in line with the July 21st. Okay, that's going to be your other crucial line, and you just understand how crucial this level is. We're in the process. Yes, we have the inverse head and shoulders. Clearly, that is that goes without saying. It's just I mean, if you trade a lot, it's just yes, that is a big pattern. We have had a few in the past on Bitcoin. Just to note, a few inverse head and shoulders that haven't worked out to their fulfilled maximum. So, not to shy anyone away from this inverse head and shoulders, still ready to trade. But that has been a characteristic of Bitcoin that we have noticed, is that Bitcoin on a few instances, particularly recently during this, there's been a lot of pattern failure, etc. But throughout the entirety of it, we can go through some other examples back in this region, etc., where we had some inverse head and shoulders that didn't want to complete. So that characteristic nature of the price just, yeah, it does. It's still. It's still kind of with us a little bit in terms of you've done this a few times. Not that it wouldn't ultimately get there, but it likes to wind around a bit. You guys, let's see the upside target here in terms of that inverse head and shoulders. That would be at 53,441. Now, the interesting thing for the discussion in terms of the line chart to the candle wick and whether or not the specific extensions that we have right now are accurate on the screen. Okay, that would be the question. It's like, well, London, you drew it to the lines on the daily, right? So how do we know that that's an accurate, you're still shy of that 50% to the upside, that 54,000. Were we to complete this inverse head and shoulders, that's inaccurate. You would maybe think that's inaccurate. Okay, let's try and address that issue. If we go to the candle wick, if we go to the actual candle wick measurement of the actual inverse head and shoulders, that amplitude would get us up to that and really past that 50%. So in terms of the targeting, I do feel that this is going to be a good set of targets for you, at least to begin with, as you look at your upside targets. It may be arguably a bit aggressive to include the entirety of the candle wick here. However, that is a maximum express technical target. In addition, we may want to raise and adjust the neckline. I'm completely aware of those. What we say, just those subtleties of the price, which require additional attention, which we can get to if you guys require that or if you would like that. Definitely like in the back if you guys would like that. Raising this, excuse me, guys, raising this here, as we would look at this, raising this specific neckline too, and just do be aware of this, raising the neckline to the candle wicks, okay, and it did strike that 100, right, the 100 moving average on the daily. Raising that to the candle wicks does a few different things. It raises your target because we have a higher neckline. It also raises the threshold, which you need to break out of in terms of getting price to the upside. In terms of, I say qualifying price, getting price to the upside. Essentially, you're going to have to get through the 100 up into the 200. It's going to be a real dicey situation, and I just want to prepare you guys for this. As we would look at this, understand, if we raise the neckline to the amplitude of the candle wicks, okay, just follow me here. That means that you're essentially putting the neckline right at the two levels, the critical levels I've been talking about, the 100 and the 200 on the moving average, okay? That's the 100, that's the 200, the orange and then the purple. So you're in this is the kicker right here, guys. The same issue, the same question in terms of what's going to establish our uptrend? What's going to be the defining moment for Bitcoin on the daily? Definitely on the daily, we can just see it's that 100 and the 200. It's nice that it's in concert with, or it's at the, it's combined with or presented with a very nice reversal pattern, the inverse head and shoulders. So that's exciting, guys. It's a nice. This area is just this specific zone, and we'll just lay this out with the 45,514 to the 46,548. Bitcoin is going to need to charge through this area. Okay, so that's why I say it's a nice moment for Bitcoin. It's a nice, it's a crucial level for Bitcoin. And it's not just because it's the moving averages, but it's also that inverse head and shoulders. So yes, the inverse head and shoulders is critical. It's crucial. It's a mainstay of a pattern reversal. Okay, it just is. Or of a reversal pattern. In line there with the, I'd say just kind of equally exciting would be getting back above, and it's just nice. The technicals express themselves very well, right? We have a reversal pattern in line with our getting back up and over the 100 and the 200 moving average, right? Which I have said multiple times is one of the defining characteristics of an uptrend. It just is. When you're up and above the moving average, a lot of people, I just say that a lot of people will only trade when you're up and above. They'll be in position, a long position, once price is above the moving averages. So that's that's exciting, guys. That's a crucial moment for Bitcoin in this zone. I'm looking forward to positive price action. I know who's here. I hope you guys are doing well. I literally wanted to just show up and go through these specific details so that you specifically have these levels on your chart. Okay, so you specifically have them on your chart. I'll cut some additional videos. Let me see if there's anything else I want to refine. I'll say this: you guys know how to refine it in the back if there is anything additional. You'll go from the essentially the breakout point. So we may have some additional work here. If we break out, let's just note this while we're here. If we break out further along here towards the real extremature of the shoulder, we're close to pushing up to, in terms of the target price, that 61.8, which would be, okay, and just understand, the further you push up let's see here, the further we would push up along this neckline, along this shoulder breakout of the neckline, okay, and that carry up, if we were to maximize it out to that candle wick, that's aggressive, guys. It's an aggressive target. But the further we push up to this specific zone, once we have essentially maximized that specific neckline in line with the hit along that 100 on the candle wick, just understand that that's getting us up to that 61.8, which is a crucial. You guys know that's the percentage to which price wants to gravitate towards. That's 58,495 to 59,706. So that becomes pertinent in terms of what you want to put on your trade station there. That would be a nice thing for you to have on your screen to be able to capture that. An additional 32.44% in profit, and from our pricing target, that would have accomplished a move of 73.33%. So that looks really nice. And yeah, I just wanted to come to you guys and make sure that you had these technicals. The other technicals to lay over will be, okay, will be the, let's see, will be those macro to ground zero, okay? And by macro to ground zero, you guys understand, that's the extensions from zero up to, I mean, let's get specific with it. That's 69,000 exactly. Okay, get down to the. You can even snap it to the actual candle wick if you choose, down to the exact express minimum. Thereby, we would look at a different set of targets to the upside. So these, the fact that they have expressed themselves thus far, the ones that I have on the screen, just really just perfectly, just spot on. I'm very comfortable with these right now. The fact that depending upon the breakout in the candle wick to the line variation in terms of the measurement, that the 61.8 to the 65th is indicated as well, is crucial in terms of my assessment of that also. So I hope that you guys are doing well. I just wanted to stream real quickly and get this information to you. I'll probably cut a short video, and yeah, that's it. I hope that all of you are doing well and had a good start to your week. We have a couple days left here, and before we get into the weekend, I'll just say that we hope we can spend some good time as a group streaming, and we'll try and accommodate time frames, etc., and see if we can do that to get some just to get some community interaction going. Angel, we've missed you the last few streams. I hope you're doing well. It's not the same without you, and it's not the same without you here tonight as well. But I know that everyone is busy and trading, so that's good. That's a good thing. So, guys, this is London with Crypto Kingdom and Bitcoin Spike. Lay out these technicals, and if you already have them on your screen, hey, you're beating the market. I'm sure that